Just how good of a year was it, and do you think there's any chance it continues in 2024?
So first, Happy New Year to all. Yes, I think that the markets can continue to hit higher highs. That's on the back of strong economic growth, strong earnings growth. Yes, valuations are quite high with a earnings yield of 5%, but you had that Powell pivot that basically ginned up risk markets, and we think it will continue into January, February, and March.
Into January, February, March, Sarat, talk to us a little bit about what you're feeling here into the new year.
So I do think valuations are stretched, and I think the key here is the market's so dependent on the Fed, because that was the pivot for equities to actually go up. And I think you're not going to get multiple expansion. You have to have earnings growth. And we still have some geopolitical uncertainty out there. So I think you have to be very careful as to what you own, because if things are priced to perfection, especially in the Mag 7, and they can perform just fine, but I think there's opportunities elsewhere, and you just have to be careful after a 24% run, at least in the S&P.
The only thing, though, I think so is the January bias confusing us a little bit about the larger trend in markets? I was thinking back to our discussion yesterday where we talked about how, yes, the Mag 7 are up a lot this year, but going back a couple of years, they're only up 8% from 2021 or 2022 levels. So are we kind of only getting half the story if we talk about gains this year when we know that 2022 was the reverse? Yeah,
because if you look at it from the peak, which was literally 2 years ago, so many stocks, and I saw something where something like 72% of stocks haven't hit that level again, but the Mag 7 have.
Interesting.
So where do you want to go? And I think what's also happened is because we had this, quote, Santa Claus rally, everything rally, come January, February, people are going to start repositioning again. You had tax lot selling, but you also had people not selling because you didn't want to pay taxes going into the end of the year. So you get a combination of that. You get everybody coming back, working in January, and then we're looking forward. We have an election year, which has uncertainty. We have 2 wars going on that we don't really focus on that much, because what could they do to commodity prices or just generally trade? So I do think the Goldilocks is priced in at this point. So it doesn't mean to be out of equities. It means, I would say a couple of things. Make sure you're in your allocation. And make sure that you are diversified, because at this point, to be so focused and concentrated, it could actually hurt your returns.
Although, Chad, it was interesting to hear Art Cashin last hour, when asked about the year he thought we'd have, said he thinks it's going to be a pretty good year, quite simply, as we know from the history of the presidential reelection cycle. I mean, honestly, he said, it's going to be tough to fight the historical precedent for that, and it's usually a good one.
Well, you have that. You also have the falling inflation. You have 3 massive fiscal stimulus programs all converging at once. And then lastly, you have the business investment cycle in tech spending, which we believe could be a multi-year tailwind for S&P earnings. So that bodes well on the positive side. On the negative side, consumer spending, credit growth from consumers is decelerating at a pretty rapid pace. So consumption patterns could be a little bit of a headwind in 2024.
Chad, what's interesting about that, though, you bring up the retail spend, the consumer spend, the health of the consumer balance sheet. We've had folks all over our air and elsewhere in news media and business news talk about the withering or the weakening of the U.S. consumer over the last 2 to 3 years. And they've claimed that it's because of weakening stimulus dollars. They're no longer there. They've already used the balance sheet. Yet consumers kept on spending, and they did again this past Christmas season. So what's to say that they don't keep on doing it again in 2024?
Well, there was a little bit of a artificial get up and go that we all watched and saw in the earnings of some of the retailers. And that has shifted a bit. And you could see that through the earnings of Target as well as Walmart. We do believe that the consumer will be sturdy, but the big ticket items, for example, like housing or autos, that we believe can continue to be somewhat slower as consumer credit growth just decelerates. Again, not the end of the world, but that could be a little bit of a headwind, and that could be one of the reasons why perhaps Jerome Powell, which I'm thunderstruck that he did, made his massive pivot as he did, which the markets reacted to.